Hi, this is Brent with Trade Therapy, and welcome back to the Trading Couch. In this segment, we're talking about Coinbase sitting in what appears to be a wave two reset, heading into easing policy. A really interesting time in the chart. We're going to run through that. Before we do, a quick disclaimer: this video, as well as all of Trade Therapy content, should be considered for educational purposes only. It's not intended for investment advice. Trading involves risk, including the risk of loss. Always do your own due diligence, trade according to your own plan and your own risk tolerance. Let's start with a clean weekly view here of Coinbase. If we go back to the low in 2022, and this is really where Coinbase was left for dead as a distressed asset. Ever since then, it's been a steady sequence of higher highs and higher lows. The price climbed along this rising support line that contained every one of the major pullbacks. The moving averages turned up early and have stayed broadly supportive the entire time. The most recent decline has retraced from the highs back into this rising trend line in this EMA cluster right here. Structurally, this isn't what a failed breakout looks like. It's really a classic test of an advance. But the question is no longer, is Coinbase broken? It's really how much of this thing do larger accounts want to carry now that the Fed is starting to ease? Coinbase is really interesting as policy starts easing. Are we going to see more participation step in? Are we going to see volume coming in with policy conditions that should benefit risk assets, including the crypto space and including Coinbase? If we jump over to an annotated chart, we can see the first leg off of the 2022 low works really well as wave one. This is the initial impulsive move up out of this base, but you notice size is still limited. We didn't see size really start coming in until we got this pullback in April. And that's when you really start to see size coming in and price pushing up into the prior all-time highs and then going sideways and stalling back into the support band. This band's really behaving like reaccumulation rather than distribution. It's really unusual to see something go through a complete accumulation structure and then before getting up and breaking out of the previous cut base, going through reaccumulation again. That suggests larger players have very strong appetites for this asset. Wall Street and institutional money is trying to accumulate as much of this asset as they can because they're heading into easing monetary policy. We do expect that to reflect positively on risk assets like Coinbase, and it sets up really well for a three-wave price cycle. And those of you that have been following Trade Therapy content for some time are familiar with the three-wave price cycle, where wave one is the initial leg up out of the base. Wave two sometimes can be very painful and wipe out most of wave one. That leads into wave three. And if we look at our Coinbase chart, we see wave one and wave two. We're not seeing that deep wave two pullback, but we are seeing it back to its all-time rising support line. So setting up well for what could be an extension up into that wave three. Coinbase's current ABC decline here, fulfilling the role of wave two. For retail traders living through it, the move feels really hostile. It gives back a big chunk of gains. It really shakes confidence. But for institutions, this ABC pullback, this wave two pullback is really part of the design. It's a correction, but it's controlled. It's where they can measure how much weak supply is really left, how many weak hands are still holding coin before they move into the next phase. They want to quickly build size from the emotional reactions to the weaker hands, to the retail traders that are holding coin. So they're looking to build size as we head into new liquidity being introduced from the Fed and shifts towards a friendlier rate environment, and that broader thesis holding true, assuming Bitcoin can hold on to its structure. This larger wave three price extension coming up for Coinbase has a lot of attention on it right now. So what does it matter from here? The key question is really simple. Does coin continue to respect this rising support area? Are tests able to be held by this rising all-time demand line? or does it break? And are we heading down in for a deeper corrective period? Does the crypto sector need more time to build institutional and Wall Street support? That's not our primary expectation, but that's what we'll be watching. Can this support line hold? And will we be able to see an extension up out of that? As policy begins to loosen up, as liquidity gets introduced back into the market, are we going to see that wave 3 extension here? We don't have a position in Coinbase. We're watching this moving average here. We're watching this bounce for early signs of wave 3. We're going to be watching how it handles all-time highs. If we can get up off of this support line, we may consider taking an entry into a long position at that point. Either way, the point of this structure isn't to predict a single outcome. It's really to recognize what expectations are out there for Wall Street and larger institutional money as we head into this easing period. Are they going to be adding exposure? We believe they are. We believe that this reaccumulation structure stacked right on top of this accumulation structure is a clear indication of Wall Street and institutional appetite for assets critical to the crypto sector like Coinbase. That's all the time we've got for Coinbase this week. We'll see you back on the trading couch next week.